The country's biggest investor shifts its money away from shares and towards bonds. Landlords enjoy the longest run of rising rents on record, and Japan Airlines has come up with a way to save costs. Rent clothes to travellers to stop them from taking luggage. It's Thursday, the 6th of July, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. So much promise in that Japan story, isn't there?
It's really just tickled me. I don't know why. It's just such innovative thinking, isn't it? It's just like, you know what? I reckon there's a way to do this where we don't have to check in any luggage.
That's right. We can save carbon emissions by not checking in luggage. I tell you what, Japan is a quirky country, and this is a very quirky story.
It is a great story. It's coming up a little bit later on. Something else that's coming up a little later after the show, in fact, is an interview with Tanya Barden, CEO of the Australian Food and Grocery Council.
Yes, it's all about recycling. And of course, we had the collapse of the recycling scheme, which Woolies and Coles were using with soft plastics a few months back. And the National Plastics Recycling Scheme is trying to take some of the loads. We talk about that and more generally what retailers are doing about recycling and greening themselves, so to speak. Great chat.
Yeah, it's a really interesting one and a lot of interest in it, particularly, as you say, after the collapse of Red Cycle and the discovery of these massive stockpiles of soft plastics just tucked away around the country. So it's a big pressing issue. The main story, though, this morning, Sean, is another big one. Australia's largest superannuation fund, Australian Super, returned 8.22% for its default My Super option for the just completed financial year, setting the benchmark for investors around the country.
Yeah, so Aussie Super, with $300 billion under management, is the country's largest non-government investor. The good result for the My Super option was helped by a rally in tech stocks. Aussie Super's Aussie shares portfolio returned 14.5%. Its global equities returned 19.5%. But the group has written down the value of some of its office towers by as much as 10%. That's because office towers, with more people working from home, aren't as valuable as they were pre-COVID. Within the property sector, the super fund has been switching from office towers and shopping centres into industrial parks and warehouses. Now, Aussie Super is very important because it really is the benchmark for investing in this country. Its result also suffered from a drop in private equity and fixed interest investments, though its infrastructure portfolio did pretty well. The final result was below that of the second largest super fund, Australian Retirement Trust, which returned 10% for the 2023 financial year.
All right, so that's what's happened. What about the future, Sean? What does Aussie Super say about the new financial year?
This is where it gets really interesting. Mark Delaney, the group's chief investment officer for nearly 20 years, says 18% of his members' $300 billion is now in bonds. That's up 70% from this time last year. Most of the holdings are in the very safe government bonds. And what it shows is that Aussie Super really expects things to get very tough, economically speaking. The defensive positioning comes at the expense of most other asset classes, with allocations to international and Australian shares down, as are allocations to cash, private equity, unlisted infrastructure, and property. It's quite a contrast to the last financial year where equities delivered the performance. Now, while 1 year's results for a super fund are very short term, Aussie Super has averaged an 8.6% annual return over the past decade. While we're not providing any financial advice because it does very much depend on an individual's circumstances, it's always worth watching what the country's biggest investor is doing.
Yeah, it certainly is. All right, how did local markets perform yesterday?
The S&P ASX 200 closed down 0.4% to 7,253 points. Telcos were the standout, thanks to a 1.2% jump in Telstra's share price, and the utility stocks did pretty well. Worst were the healthcare, financials and energy companies. Mind you, the share price of AGL Energy hit a new 52-week high yesterday. It's up about 33% over the past year. Transurban Group, WiseTech Global and Aristocrat Leisure were among the worst performers. A little bit of corporate news around. Johns Lyng Group agreed to buy Smoke Alarms Australia and Linkfire, adding to its growing property services portfolio. And Treasury Wine Estate said it will close its Victorian commercial wine growing operation, Caradoc. It's been running that for about 50 years, but lower consumption and rising costs have weighed on the business.
And international markets?
Well, an OECD report released yesterday morning says headline inflation is slowing across almost all its members. Very good news. But core prices, what we call in Australia mostly underlying prices, are proving more resilient and more rate rises might be needed. Now, the OECD said year-on-year inflation among its 38 members, which of course includes Australia, fell to 6.5% in May. It's now at its lowest level since the end of 2021. Headline inflation is falling in all countries except the Netherlands, Norway, and the United Kingdom. The OECD warned that while rates may need to rise, that option isn't without risk. Very interesting from the OECD. And before we leave international markets, the Aussie dollar is trading around 67 US cents, pushed through that mark yesterday.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Indonesian President Joko Widodo has left the country, but not before he joined Anthony Albanese to strongly deplore Russia's war against Ukraine, and in a message aimed at China, declared support for a region, quote, free from coercion.
It was an unusually strongly worded communique from Jakarta's perspective, and the two leaders yesterday stressed respect for international rules and the importance of diplomacy to avoid the risks of miscalculation. The communique spoke of the importance of an open, stable and prosperous region where collaboration is strong, competition is managed responsibly, sovereignty and territorial integrity is respected, and where countries can exercise their agency free from coercion. As part of the visit, Australia pledged $350 million to spur Indonesia's green energy transition and committed to working with the country to develop an electric vehicle industry.
Australia's capital cities are experiencing their longest run of rental price growth on record, with record prices for units and houses across most capital cities.
Apart from Canberra and Hobart, house and apartment rents across the state capital cities are now at record highs. Sydney has become the most expensive city to rent a house or unit for the first time since 2018. According to a report from property marketplace Domain, it is definitely a landlord's market out there, though a slight rise in vacancy rates to 1% suggests the peak might be over. It's all about too much demand from strong immigration and not enough supply. It's a very familiar story. The Domain analysis says the current period sets the record for the longest stretch of continuous rental price growth on record for Melbourne house and unit rents, together with houses in Adelaide and units in Sydney and Brisbane. Over the past year, Adelaide, Melbourne and Sydney house rents are up 13%, and in Perth, it's 16%. Canberra and Hobart are down 2%. In the unit market, Sydney's up 28%, Melbourne's 22%, Perth's 20%, and Brisbane is 18%.
It's great for investors, but my word, that's tough for tenants, isn't it?
Very tough for tenants. And Albanese, the Prime Minister, has been talking about some sort of cost of living relief package. I wouldn't be surprised if we see something over the next few weeks.
All right, we'll keep an eye on that one. We got a pretty interesting insight into the world of economics of mortgage lenders yesterday, Sean. Macquarie Bank Chief Executive Greg Ward said margins on loans got as skinny as $3,000 annually on a $500,000 loan.
Yeah, so Ward was appearing before a parliamentary committee hearing and said Macquarie Bank slowed its push into the residential mortgage market because he suspected aggressive cash offers and refinancing terms had pushed rivals to write loans at large losses. He said the cashback offers were generally unprofitable for lenders, and Macquarie hadn't ventured down that path. Now, of the four majors, ANZ is the only one who still has a cashback offer in the market, and the latest figures suggest it is winning market share. Figures for April and May show Macquarie's mortgage book grew at the same pace or slower than other major banks, meaning its market share is at best at a standstill. Analysis by Citi this week found smaller banks like Bendigo and Adelaide Bank, Suncorp and ING have delivered above system growth over the last 3 months. Now, some of those are offering those cashbacks. It's just interesting to see whether or not they will be economic.
You mentioned earlier, Sean, the difference in office towers since pre-COVID. This is an interesting story along those lines. About 1/3 of office leases signed are for a year or less, which is double pre-COVID levels, with property managers really scrambling to attract tenants.
Tenants are just unwilling to commit to longer contracts as they reassess their workplace needs in the wake of the work from home trend and slowing economy. That's according to a survey from property management platform Released. The number of 3-year leases has halved over the past few years, and the average office lease has gone from 41 months to 29 months, according to a report in the Financial Review. Landlords are now being forced to match short-term leases available at places like WeWork. According to Released Chief Executive Tom Wallace, it means landlords need to offer more cafes, end-of-trip facilities, that sort of stuff. As a result, lower-grade offices are really struggling to maintain longer leases.
Sean, AMP's share price tumbled 5% yesterday after the federal court in Victoria ruled in favour of claimants against it in a class action known as the buyer of last resort proceedings.
This has been going on for a while. The claims related to AMP changing its buyer of last resort policy back in 2019. It means financial planners operating under the AMP banner could sell their clients' books to the company with 12 months' notice at 2.5 times the value of ongoing revenue. Now, previously, that figure was 4 times revenue. Effectively, AMP was saying to the planners, we'll buy your books from you at 4 times revenue. Then they changed it to say we're buying at 2.5 times revenue. You can imagine some of the planners weren't happy. AMP will pay more than $900,000 to 2 financial advice outfits, Equity Financial Planners and Wellstone, and may be on the hook for more after the federal court called for submissions on whether other members of the class action should get damages.
And finally, Sean, the chorus calling on the government to reappoint Philip Lowe as Governor of the Reserve Bank is growing, with opposition finance spokesperson Jane Hume adding her voice to the debate yesterday.
The gist seems to be that given the tough economic period we're heading into, no one is better qualified to run the central bank than Dr. Lowe, notwithstanding his comments early last year about rates not rising until 2024. Several market economists have come out in support of Lowe in recent months. Prime Minister Anthony Albanese was asked directly about who would replace Lowe yesterday, a decision that will be announced later this month. Albanese praised Department of Finance Secretary Jenny Wilkinson. Maybe you can read something into that, maybe not. He also praised Treasury Secretary Stephen Kennedy. He said both were outstanding public servants. Of course, Lowe himself is still in the running.
All right, on to international news now, and got some cracking stories today, Sean.
They are, yes.
How about this one? A small amount of cocaine was found in, of all places, the White House over the weekend. According to the New York Times, this is triggering something of a guessing game.
Yes. Why would you ever take cocaine into the White House?
I've got no idea. How would you get it in?
Yeah, I mean, who knows? So a white powdery substance was found and initial tests determined that it was cocaine. President Joe Biden and his family were away at Camp David when a uniformed Secret Service agent found the substance during a patrol of the West Wing. It prompted a brief shutdown of some of the White House campus as response workers assessed whether the substance was hazardous, something else. A spokesperson for the Secret Service said that the substance had been found in a work area of the West Wing. Who's been having those all-nighters? Maybe that's the place to start looking.
Oh, what a spectacular witch hunt this could be. It's like the game of Guess Who. Remember that one? Do you remember Guess Who?
I'm trying. No, I don't, sorry.
Please tell me you remember. Okay. So Guess Who is the one where you have all the little tabs kind of open and you have to kind of flick it down and say, has the person got glasses? Or has the person got brown hair? And they say no. And you kind of flick down. No. Not ringing any bells at all right now.
I have had a few glasses of wine and had, Who Am I style games, which I think is something similar.
Goodness me. All right. I must educate you in this, Sean.
Right.
I feel a Fear and Greed games night coming on.
Oh, God. Yep.
Don't sound too excited. Now, this is another great story. We have a trifecta of fantastic international stories here. Investors spent almost $200 million trading shares in Bed Bath & Beyond since the homewares retailer went bankrupt 2 months ago.
It's the ultimate speculative investment. Maybe it's just plain dumb. Not sure. Mind you, the price of Bed Bath & Beyond shares are up 300% since it went bankrupt. I don't know what that all means. Bed Bath & Beyond was one of a handful of unloved consumer brands that became popular with retail investors during the coronavirus pandemic. Small investors pushed the stock on social media. Basically, its share price went to levels far above what most professionals considered rational. Bed Bath & Beyond ultimately filed for bankruptcy protection in early May. Delisted. Fair enough. This is according to a story on the Financial Times website. Nevertheless, an average of 18 million of the company's shares have changed hands each day on over-the-counter markets since then. So an over-the-counter market probably needs an explanation. They're not traded on an exchange. They're just bought and sold directly between investors. So someone thinks these are going to be worth something. In its initial bankruptcy filing in May, Bed Bath & Beyond reported debts of $5.2 billion compared with total assets of just $4.4 billion. No one thinks the shares are worth anything. I mean, even the company doesn't even own the Bed Bath & Beyond name anymore. So it's beyond me.
That is just a bizarre story.
It is bizarre. Mind you, talking about bizarre, next one's even more bizarre.
Oh, this is amazing. This is the one that we mentioned at the top of the show. Tourists and business travelers to Japan will soon be able to show up just in the clothes that they're wearing, thanks to an initiative by Japan Airlines and Sumitomo to offer rental clothing during visits to the country. How fascinating is this?
Yeah, so describing the initiative as a bid to promote sustainable tourism while offering convenience, the airline said visitors would be able to select apparel based on size and seasonal needs via a website before jumping on a plane to Japan. The service will run on a trial basis through to August 2024, according to a story on Bloomberg. One set of clothing will put you back somewhere between 4,000 and 7,000 yen, let's say about 80 Aussie dollars, and people will be able to rent up to 8 outfits for as long as 2 weeks in 3 sizes, small, medium and large. Chosen styles include smart, smart casual and mixed, whatever that is. And the outfits will be delivered to a traveller's designated hotel. The apparel will be sourced from clothing product overstock. That helps minimise waste. Win, win, win all round, Michael.
Don't want to be a negative Nelly on this one, Sean.
Yes.
But I'm going to say right now it's not going to work. And you know why?
Why?
Because you show me anyone who just happens to fit those 3 sizes, small, medium, and large. It's impossible to have kind of one size fits all. I reckon you'll get, like, if you get 8 outfits, one of them will actually fit you.
True. I actually don't mind the idea, and without bringing a race element into this, I think Japanese people generally are quite stylish, and I'm sure I'm not. So the idea that someone else is picking an outfit for me,
this is a style upgrade for you.
I would be going to large. I'd be going a smart casual and a mixed, and in fact, I'm all for it.
So you would be able to tell the people that have rented their clothes, because they will be the ones that kind of turn up in things that look like tents, because they accidentally ticked the large box when they actually meant to get the medium one. Like, now they're stuck in 2 weeks worth of kind of baggy clothes.
Yeah.
All right. Up next is a Fear and Greed Daily interview with Tanya Barden. You're speaking with the CEO of the Australian Food and Grocery Council.
Yes, all about the National Plastics Recycling Scheme, what grocers are doing to recycle soft plastics. Great interview.
Yeah, it's a really good one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't miss the new episode of How Do They Afford That, which came out yesterday. This week's episode is all about financial planners, how to find a good one, what you can expect from them, how much it's going to cost you, which is always a very important question, and some kind of cost-effective alternatives as well. You can find that basically wherever you listen to podcasts, or we'll also put a link in today's show notes. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 6th of July, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.